SSR Mining is a Vancouver-based mining company, and it focuses on precious metals projects. This afternoon, I'm joined by Paul Benson, who's the CEO. Good afternoon, and thanks for joining me.
My pleasure, Remy. Thank you.
Well, we're here in Vancouver. You're a Vancouver-based company, and you recently went through a name change. So tell me a little bit about that and the evolution of the name.
Sure. It was really a rebranding of the company. We're an old company. We've actually been around for 70 years. Started as Silver Standard, opening the Silver Standard mine back in the 40s. When that mine closed, focused on exploration. In the 90s and early 2000s, the business model was around being a silver land bank. That business model needed changing when the royalty streaming companies came in, and so we became a producer, opened the Paquitas mine down in Argentina. We're a 100% silver producer. We started to, or continued to evolve. We acquired the Marigold mine in Nevada, which brought revenue pretty well evenly split between silver and gold. In 2016, we acquired the company Claude, and with that picked up the CV operation, and that lifted gold production to around 80% of revenue. And what we found that although our current investors knew us well, the old name Silver Standard didn't reflect the company as we are today. And so we considered all sorts of new names, but then wanted to keep the history. And so SSR is our old code for Silver Standard on the stock exchange. So we made that name change last year, and we think it's been very successful.
And now that you are SSR Mining, I do want to talk about the outlook for the company as well as your growth profile. So could you tell us about the different operations that you have?
Sure. We have 3 operating mines today. So going through each of them, Marigold in Nevada, which is a low-grade open pit mine. It's an amazing mine, been in continuous production, coming up for its 30th anniversary, and it's still got a 10-year life ahead of it. It's going through a growth phase. We acquired that 4 years ago. It was operating at around 150,000 ounces per annum. In the last 4 years, we've been running at around 200,000 ounces per annum. And over the next 3 or 4 years, we'll see production lift there to over 265,000 ounces per annum. So solid growth there. The next mine is CB in Saskatchewan. Very different, small, narrow vein, high-grade underground. When we acquired that mine 2 years ago, it was doing around 75,000 ounces. This year, midpoint on our guidance is around 90,000, but we'll see production lift there through 2022 up to around 120,000 ounces. So again, good growth there. Finally, the operation in Argentina, it's called the Puna joint venture. We own 75%. This year, our share of production, order of magnitude, is around 3.5 million ounces of silver equivalent. Next year it'll go to around 7 million ounces of silver equivalent. So order of magnitude, that's around 100,000 ounces of gold. So each of the assets, each of the mines today has a strong growth profile, but each of them has good exploration upside as well. So we're confident we'll continue to increase production going forward.
And Paul, now that we've gotten a better idea of what you have in place in terms of growth profile, I do want to move on to strategy.
Yep.
So your company has made significant investments in exploration at your 2 gold mines this year. So let's move on to strategy. Fill us in.
Sure. For me, strategy in mining is dead simple. It's the only hard part's the execution. It's very hard to actually do. There are only 2 ways to get new units of production. One is drill them, and the other is buy them. And so we spend equal time looking or doing both. So at each of our gold mines we're investing significantly this year. They happen to be the same numbers. Last year we spent $5 million US at each of Marigold and CB. This year we've increased the budget by 80%. At each site we're spending $9 million US, so 18 between the 2. And that's because we see very good exploration upside at both. This year down in Argentina, we're not exploring because we're in the middle of a construction phase, bringing the new deposit online. But again, good exploration upside there. We're doing some regional magnetic surveys there, which are probably the best regional tool in that part of the country. So I would hope and expect to start to spend money on new exploration in Argentina next year. But yeah, investing heavily around our current assets.
Okay, well, now that you've touched on your strategy as well as your operations in Argentina, I do want to move on to investor interests. Now, there might be people who are not familiar with SSR mining in the viewing audience. So
Sure.
tell me about the advantage of investing in a company such as yours, and tell me a little bit about your financials.
Absolutely, and I think probably one of the best ways to think about why is an investment in SSR mining attractive is by thinking back over the last 3 or 4 years, which shareholders have actually suffered the most, and they fall into a number of groups. One, single asset companies, when the shareholders wake up and discover that their one mine has had a problem. Two, those in politically risky jurisdictions where the shareholders wake up and find that a government has imposed a new tax or taken over the mine. Three, where they have the company has over leveraged the company, taken on too much debt. Shareholders wake up and find that the company has issued new shares in a bought deal and diluted their shareholding. So using that as a frame of reference, when we look at SSR mining, we have a portfolio, 3 assets. So we're not a single asset company. Our 2 biggest assets are in Nevada and Saskatchewan. They're normally ranked in the top 2 or 3 mining jurisdictions in the world, so low political risk. Very, very strong balance sheet. You'd have to say probably the strongest balance sheet of our peers. All our numbers are US. We have coming up to $500 million of cash on the balance sheet. The only debt is a convertible note, which is 265, and that's not due to 2020, and we could roll that over tomorrow. So we got net cash over $200 million. And another important fact, we're not a serial issuer of equity. The last time we issued equity to raise money, to raise cash, was 2010. So again, we've looked after shareholders. We've avoided diluting shareholders. We only have 119 million shares on issue. So that's a very strong foundation. We have 3 good assets, each with exploration potential, each with growth from their base reserve and resource. On top of that, they've got exploration potential. We also have a number of internal organic growth projects which we're reviewing at the moment. And we also have a very good track record in terms of M&A. Over the last 4 years, we've done 4 transactions. First, we bought Marigold for cash. We bought the adjoining property for cash, Valmy. We did the Earn-In joint venture in Argentina, and then we took over Claude Resources. And each has been clearly a value accretive exercise for our shareholders. So I think we have a very strong management team, good experience, very strong board, who are very focused on corporate governance. And I think that's, again, one thing that shareholders need to pay a lot of attention to. I'm the only executive director on the board. Everyone else is independent and non-exec. There's a non-exec chairman, and they're there to make sure management don't lose track or aren't meeting targets, or worse still, spending money on themselves.
And I think when potential investors take a look at a company, they look at the financials as well as the management team.
Yeah.
You've given us a better understanding of that, but what about your background? Could you shed some light on your history?
Sure. Scary to say, I've been in mining now for over 30 years, so you might be able to pick up from the accent, I don't know. I grew up and went to university in Australia. Studied both mining engineering, and I did a science degree in geology and exploration geophysics. So cover the basics of mining, all the way through the value chain. Started off in production, so first half of my career was in and around mostly underground mines, mining engineer, shift boss, superintendent, general manager running mines. Then went to business school. And then came back and more or less drifted towards the business development and strategy side, and the second half of my career has been in that. I think one of my strengths is that I've had the opportunity to work for very large companies. So I've worked for the biggest mining company in the world, BHP. I was head of business development for their base metals division based in Chile. Also worked for Rio Tinto, worked for intermediates, Renison Goldfields, and in a junior in Australia, Troy Resources. So worked at big and small. And you get benefits from both. Also international experience. So lived and worked in 4 states in Australia, Portugal, Finland, now Canada, the US and Chile. So to me that gives a solid base, but you're only part of a team. And we have a very strong management team with similar sorts of backgrounds. They've worked at big and small companies and quite diverse backgrounds. So to me, that sort of really adds to the strength. And again, a board with a very strong and diverse background, which again helps from a governance point of view.
And Paul, last but not least, before I let you go, I do want to ask about risks and opportunities. You've given us such a good understanding of your company, where your projects are located, what you're doing right now, and also about your management team, financial outlook. So tell us about some of the risks.
Sure. One of the things that took me a long time to both understand and then manage as a professional was try not to lose sleep over the things I can't control. So I no longer have nightmares about the gold price or the silver price because it's outside of my control. But obviously that's one of the biggest risks that investors face. You know, don't invest in a precious metals company if you don't have a view on the precious metals price. Then you look at individual risks, and every asset has some in common. So a geological reserve and resource is purely an estimation based on very, very limited data. You know, it's just a small drill hole over a 20 or 30 metre spacing, or maybe even a bigger spacing on different type of ore body. And so you have to understand there's always risks. Sometimes you'll be on the plus side, sometimes on the negative. And then you have political risk, but as I said, our two major assets are in very strong jurisdictions there. And then the things outside of your control, which again, or out, you know, that you're not thinking about. But we have a good risk management process internally, where we try and think the unimaginable, and then think about, is there anything we can do to minimise the impact of that? So, you know, I think from a shareholder's point of view, you know, it's again probably one of the benefits of coming from a big company like a BHP, where they put a lot of effort into risk control. So we have that in our culture. But sleep easy because our assets are actually in, you know, very good, safe jurisdictions.
Well, Paul, they do say that with experience comes wisdom, and it seems as though you've gained that from working in the industry for several decades. So I do want to wrap this up by hearing about what you think the opportunities are with SSR mining.
Sure. I think they're very positive. If you look in the space we're in, we're called an intermediate producer, which is somewhere between 300,000 to over 1 million ounces of gold per annum. You know, if you compare us to our peers, you know, we have one of the best balance sheets. We're one of the few with growth. You know, if you go from this year through to 2022 or so, we've got over 30% growth in production, and we have the exploration upside on top of that, and a you know, best-in-class balance sheet. And we have, you know, the one thing I didn't touch on is the track record. So not only in terms of the people, but as a company delivering on what we say we do. So in each of the last 6 years, we've either met or exceeded guidance, both in terms of production and costs. And the number of TSX listed companies that could actually state that, I think, is very, very low. And probably the other one, which is fairly unique, especially amongst our peers, if you go look on our website, in the presentations, we've got a page which looks at corporate governance, and we actually achieve the score of 1 from ISS, the proxy advisors. 1's the best, 10's the worst. We're one of the few mining intermediates that scores a 1, and we're allowed to put that sticker on our presentation. So again, you know, investors should be worried about corporate governance, and you know, at least there they do get an independent view. They don't have to listen to me to say it's positive.
Well, Paul, thank you so much for joining me here at the Sprott Natural Resources Convention, and I look forward to speaking to you in the near future.
Thank you very much.
Thank you.
Cheers.